Hey guys, it's Sasha. Donald Trump just won the US election over Kamala Harris, even as a few states are still busy counting the votes. And the stock market is going absolutely bananas this morning. The S&P 500 is up 2.2% in pre-market trading, which is an insane one-day gain. Elon Musk campaigned actively for Donald Trump, and Tesla stock is up over 12% this morning. And while the United States is just coming to terms with Donald Trump coming back for his second term, the stock market is blowing up. It's jubilant at the fact that the Republicans won the US presidential election. And because the election is a zero-sum game, you would naturally presume that if Kamala Harris was elected, we would be seeing a bloodbath in the stock market instead. So why is it the stock market is booming this morning after the US election? And what does Trump's election mean for the stock market next year? Well, the stock market has been booming for the last 2 years after declining in 2022. In 2023, the S&P 500 made a 24% return, and this year so far has already returned another 23% on top of that. And it's interesting because the returns over these last 2 years have been mainly driven by the big tech stocks and everything to do with AI. The rest of the stock market has been stagnant under Biden, and this morning we're seeing a very sudden shift. Look, Nvidia is up in pre-market trading, but it is only up 0.9%, much less than the stock market average this morning. As I'm recording this video, Meta is actually down 0.7%, while the rest of the stock market is celebrating. Amazon is flat this morning. Microsoft is up, but not as much as the S&P 500 overall, and this is really super interesting. This might change down the line, but the point is this: the big AI companies that have driven pretty much all of the gains in the stock market in the last 2 years are not the companies that are now driving this big shift. They're not the companies that are now benefiting this morning from the Trump election victory. The S&P 500 is up despite those big tech stocks being average, and look at how green the stock market is this morning. You know what else is green? eToro, who are the sponsors of today's video. eToro is one of the most popular investing apps in the world, and recently eToro has become a whole lot better, because now if you're based in the UK like me, you can invest in UK stocks completely for free. You can deposit money into your account in pounds and then buy UK stocks also priced in pounds. So if you're sensible and you want to buy something like the S&P 500, you can do that completely for free on eToro. No fees to deposit, no transaction fees to buy, and no fees to sell afterwards. If you also want to invest in US stocks, eToro lets you convert your money into US dollars for a small one-off fee of 0.75%. And then you can keep your money in dollars for as long as you want without having to pay fees every time you buy or sell US stocks. eToro is also offering a trading course worth $2,000 for free. This is a limited time offer, so if you want to check it out and brush up on your analysis and risk management, all you have to do is open an eToro account using my link and make a deposit. Use my link in the description or in the pinned comment and see how much you like it. So the stock market is up despite those tech stocks not having a great morning. And there are two separate things at play here. The first is the fact that the silent majority of the stock market has had a very bad time in the last 3 years. Small caps, stocks that sit in the Russell 2000 index, all of these companies got decimated when the stock market fell back in 2022. While the S&P 500 fell 25% at the beginning of 2022, the Russell 2000 index fell 32%. This is an index of smaller companies in the United States, companies that are not as big or as popular. And since the 2022 crash, the S&P 500 has been hitting all-time highs in recent months, up over 21% from the 2021 peak. Small stocks have still not recovered though, and the Russell 2000 index is still sitting at the moment 7% below where it was 3 years ago. So this morning, all of those stocks that are not the big AI stocks, not the popular ones, are suddenly bouncing. Donald Trump is still 2 months away from setting foot inside the White House or passing any laws, but despite everything said during the election campaign, the stock market seems to be celebrating. I will make a separate video where I go through Donald Trump's economic policies in in more depth, but in this video, let's focus on the stock market specifically. Even though Donald Trump's previous term included the 2020 stock market crash, when the stock market fell 30% when COVID arrived, during his first term of presidency, the stock market overall, including the crash, went up 64%. That's over 13% per year on average. Now, putting politics aside, the stock market had an almost identical return to the 8 years under Obama, except under Obama, there was no 30% crash to contend with. And the dollar was at its strongest in recent years during the Trump presidency. One of the cornerstones of Trump's new economic policy is the introduction of tariffs and the substitution of some of the taxes that people currently pay with the revenue raised via these tariffs. Tariffs get a bad rap from the media, from many of the pretend economists, because introducing tariffs can mean higher prices, and it will result in higher prices. If it costs 10% more to import something, for example, or 60% more to import something from China, well then the price of that good or component or service in the United States is going to have to be 10% or 60% higher to the consumer. And ultimately, it is the consumer that is going to have to pay that higher price. So some of the noise that I am seeing all over the media is saying that this means inflation is going to go higher, and it means interest rates will have to stay higher for longer. And if the rest of the world's interest rates are going down as they are, that means that the dollar is going to strengthen. But I think the piece of the puzzle that these people miss is that tariffs are not meant to be a purely additive effective tax. Not in this context anyway. Tariffs are meant to be a substitution for some of the existing taxation, for other types of taxes. In fact, Donald Trump seems to have a very big agenda on reducing the overall tax burden and is planning to cut federal spending by $2 trillion with the help of Elon Musk. I have no doubt there is a huge amount of wastage in the US government, just like there is in pretty much every government around the world, but we'll have to wait and see just how easy it is to find the $2 trillion down the back of the sofa. The point is, though, if the net sum of the taxation stays the same or even goes down slightly, then the impact of higher prices doesn't really get felt in the same way by the consumer. So, for a really simple example, let's say someone earns $10 and there is, let's say, a 40% tax. So after tax, that $10 becomes $6. And you go and buy yourself a beer for $5. And yeah, if you live in LA or New York and your local bar charges you, I don't know, $15 or $30 for a beer, please indulge me with this example. So you go and buy your local beer for $5 and you have $1 left over. Now imagine that the beer comes from Mexico and there is a tariff. There is a 10% tariff on it. So the bar passes on the cost of that tariff. So the beer now costs you $5.50. But the tax that you have to pay on your income also goes down by 10%. So after tax, your $10 becomes $7. So you take your $7, you go to the bar, you buy the beer for $5.50, and even though the beer is now more expensive, you actually end up with $1.50 change, and so you can go and spend it on other things. And as the consumer, you're not really worse off. I do appreciate this is an extremely simple example, but I think it explains the point. As long as the taxes net out at zero sum, it doesn't really do the harm to the economy that many people purport. And in the process, American companies are going to benefit because the equivalent American-made beer does not have the 10% surcharge. So as a consumer, if you can go and choose to buy that American beer for $5 instead of paying $5.50 for a Mexican beer, you get to save money. And what happens then is that the American beer company sees a massive increase in demand. And when demand goes up, they get to open new factories, new production lines, new supply lines. They get to employ more people. They get to build new factories. And those new employees, those new factories, those new supply companies all pay a boatload of extra tax, of every type of different tax. And then that American beer company sees its profits go up. And that pays even more through corporation tax. That's the theory. So the longer term impacts on the stocks of US companies could well be very favorable here, just like the impact during Trump's first term 8 years ago. Now, I know that CNBC and Twitter and most retail investors only really pay attention to the big tech stocks. So the nuance of smaller, really unpopular US companies all benefiting from Trump being elected might well get lost in the overall political noise in the coming days. But the reason it is an exciting time to be an investor, is that over the last 3 years, the stock market has actually not gone up at all. It's hard to see, but that's actually what's happened. The only things that have gone up is the small number of AI tech stocks that have driven the average up with them, because they all went up a few 100%. But the beauty now is that all of these other stocks that have been sitting around at a discount for 3 years doing absolutely nothing, those stocks might suddenly begin going back to more favorable valuations. And if the rest of Trump's economic plan does end up working well, and the economy starts improving at the same time, well, that's just going to be the icing on the cake for those companies. Now, having said that, Elon did say at a recent rally that if Trump wins, it may mean some temporary hardship from the actions that the US government would take to reduce the spending. But he did then follow that up by saying that when the cuts do arrive, the plan is to make them very gradual so that there is a natural flow of employment to the private sector.
We will reduce a lot of government headcount, but we're going to give, I think, like very long severances, like 2 years or something like that. So, look, just go do something else is what we're going to say, and you'll get paid for 2 years, you know. So you got a lot of time to go and figure out something else to do.
So there is no cliff edge. There isn't a big drop in the overall economy being crushed like a sledgehammer. I do know that there are a lot of economists, a lot of analysts out there who are now predicting the worst because, well, it's the same economists who are predicting the biggest ever stock market crash back in January 2023, the same economists who said inflation is definitely going up further when every data point was showing that it's already peaked and on its way down. But the market does not care what economists or people on CNBC think. So small stocks are making a huge jump, and the Russell 2000 index was up 4% as the markets opened. It's an exciting time to be an investor. Remember, go and check out my sponsor eToro to get your free trading course, link in the description and in the pinned comment. Thank you for watching, and I'll see you later.